Can you tell us about what microinsurance is and why it is important in today's world?
Microinsurance, it's not a new concept. It's been around for many decades. However, what has changed is, of course, the technology. It's made it much more available to people. I've spent most of my career, like many people in the insurance industry, we provide insurance for large corporations, wealthy people, high net worth, and that's all good and that's important. But it always bothered me in my heart that we talk about closing the insurance protection gap. We talk about the importance of insurance for society. Yet as an industry, we need to innovate. We need to think differently about how do we gain access. When I speak with other executives at big insurance companies, as well as with big brokers, they say, you know, we would love to, we need to find ways to sell more insurance. And unfortunately, they all end up exchanging insurance. So one insurance company takes the business from another insurance company, but how do we bring new premiums? How do we bring new products into the marketplace? And most importantly, how do we put those products in the hands of people? And I think the key element is, and we discuss this a lot inside our company at our staff meetings, is it's very important to keep a product that is both simple and relevant. Those two words for me are our guiding principles. Simple, so the customer can understand it. The customer, maybe this is their first time buying insurance. This is not a insurance specialist or a risk manager. This is a regular person, the person who works every day to put food on the table for their family. And historically, they have, in most of the world, including all of Latin America, even the United States, many people, their only experience with insurance is where it's required by law. So for example, for automobile. And they understand the basic concept. If something happens, the insurance is there. But I think the key is to create a product that is relevant to the person. And what I like about microinsurance is in order to provide access to people so they can benefit from the power of insurance and the protection that insurance offers, we have to create a product that is affordable. And while it's amazing to have these big policies that have 120 pages and all the sections and the language, for most people, does two things. One, they don't maybe understand it, but also, and most importantly, they can't afford it, or they're not going to spend this money doing that. So what I like about microinsurance is it takes the power of insurance, which is a really important concept for our society, and it brings it down to a simple level where we can bring the price down to a point where everyone can afford it. So I like the idea about discussing a product. It's less than the price of lunch. So yes, it's still, you have to pay for it, but it's something that if you're working, you can afford this product. It is not just for people who have nothing. It is for regular people that have a job. And we all know when we're working, everything's okay, meaning we earn money, we can put food on the table for our families, we can pay our rent or our mortgage, we can provide for our families, pay the mobile phone bill, the car payments. But if we lose that income, we're all very vulnerable. Even people who are quite successful, if you stop working, how do you provide for your family? So I think there's an opportunity to create microinsurance products that are directly relevant to people's lives. And I've given you a bit of a long answer, but I think there's a very powerful concept that I want to share with you. When something happens that prevents a person, it could be a disruption to someone's life. Maybe they're sick or injured. Maybe they are in an accident. They lose their job through no fault of their own. Or there's a natural catastrophe, an earthquake, a flood, a windstorm, a big hurricane comes like the ones that have come through Mexico. It's incredibly disruptive for people. And when they don't have access to money, they ask their family. And that's okay. The family is there to support them. But in many cases, the family might also be impacted and the family might not have the money to support them. So it falls onto society, like how does this person survive? And if we just put a little bit of money into their pocket, it can help them through this difficult time. It doesn't have to be $100,000 or 50,000 USD or 10,000. It could be just maybe 1,000 USD. It depends on the country, but it's a very important thing to provide for people so they can protect their families. So microinsurance at its essence, it is a safety net. It is a safety net to protect people in their time of need. And what it has the power to do is put money, it's very simply, is to put money in people's pocket in their time of need so that they can provide for their family.
And how this microinsurance market evolved in the recent years? And how is technology responding to this demand?
It's part of why we exist as a company. I think the insurance industry, I've been in the insurance industry now for more than 30 years. I'm very proud of the work that I do, and I'm very proud of my industry. Yet the innovation is slow in the insurance industry, and the ability to adapt to new technologies, it takes time in a big insurance company. So part of what we did with MIC Global, and MIC, Mick, it stands for Microinsurance Company. So, we were not that creative, but we had to start somewhere. But Microinsurance Company, MIC Global, we said it was purpose-built to provide these simple and relevant insurance products that provide protection for people so that they can recover swiftly. We were founded with kind of an aspirational goal to help people or really to help close the insurance protection gap and to provide insurance for people so that they can provide for their families. In order to do this, though, and you asked a very important question, and I said at the start of our discussion, microinsurance is not new. It's been there for 50 years, but it's always been extremely difficult because of the frictional costs. How do you collect the information from the customer? How do you accept the premium? How do you provide the policy? How do you make a claim payment? In going back not too many years ago, someone had to go to the person and hand them money. It's quite difficult. Now what's changed is we have these devices, these mobile phones, and of course you know this. And countries like Peru and Chile, Colombia are very advanced with microinsurance, and I believe it's almost like the changes with telecommunications. You skip all the copper wires and you go straight to the mobile phone because the technology is there. And what the technology does is it enables the end customer to access the product, to make the micro payment, to buy the insurance. When a claim is paid, we can put the money directly in someone's digital wallet, whether that's with their mobile phone company or with their bank or with another financial organization. So what the technology has done is it's taken these frictional costs out of the program and also made it available and accessible to more people. The technology is we talk a lot today about AI and there are elements that you can utilize, but at its core, the technology is actually quite simple because it needs to operate at very high volume and at scale. So it's not unusual for us, for example, to have 500,000 policies with a single customer. And you think most insurance companies, you ask how many policies did you write this year? They said 5,000, 10,000, and that's great. But when you only are doing 5,000 or 10,000, you can afford to spend more time on each policy. You can have more customization, more hands-on work. When you're dealing with very large numbers, the technology is what brings the cost down. And as I said earlier in our discussion, it makes the product affordable.
How are you taking these solutions globally? And what challenge do you face when implementing this microinsurance in different markets?
The concept of what we're building is universal. It applies in every country. Now, I will freely acknowledge some countries, for example, in Europe, there's more of a safety net. So when someone loses their job or gets injured, the government is more there to catch them when they fall and to help them, and that's a good thing. That's part of the social benefit of living in certain countries. But in most of the rest of the world, and I include the United States, most of Latin America, most of the Middle East, Southeast Asia, Africa, that safety net is very limited. There's some safety net. I'm not trying to say there's no safety net, but it is very limited. So the need is universal. The challenge, which I think was part of your question, is how do we get the products into people's hands? So for me, the challenge is distribution. And also very important in our industry, as of course you know, and most of the people listening to this discussion, insurance is very highly regulated, for both business and social reasons. So for us, we need to solve two problems when we expand. And today we're operating in 12 countries. We have the ability to do, and we would like to do business in more countries. But what I always look for me, is a local partner. So for me, the local partner helps with both the distribution of the product and with the to make sure that we're always in regulatory compliance. Because in most countries, particularly, and actually most of the countries in the world, it's required by law to have a local insurance company involved. But also for me, the local insurance company knows the market. They know the customers, they know how to do business in the country. So it's not just for compliance, it's actually for for me to go into a country where we have no people, no boots on the ground, no local knowledge, we will fail going by ourselves. So for me, it's always much better to find the right partners. And so typically we will have an insurance company that will partner with us. The insurance company quite often will take a portion of the risk, and then we will reinsure for that. So our company, MIC Global, we're a Lloyd's cover holder, so we can reinsure directly into Lloyd's. We also have access to other reinsurance vehicles to participate in the risk, depending on what is the easiest avenue for doing that. So that's half of the answer. The other half is the distribution. How do we get to the customer? So for me, insurance is very difficult when you just do B2C, and so much of insurance is sold directly to a consumer. However, there's a big cost. And maybe if you're selling home insurance or life insurance, there's enough premium to pay for those costs. But when you're doing microinsurance, we call it the customer acquisition cost, the CAC. So if I have to pay Google $40 every time someone clicks on the word insurance, the product is no longer affordable. So for us, a key thing is to partner with a company that already has access to the customer. And traditional partners, this is affinity business, so banks, mobile phone companies, very obvious. They have large numbers of customers. The customers are already working with them. They have an ability to exchange money back in both directions. So those for me are the most obvious. But what's changed in the last 5 to 7 years is the new internet-based financial services companies. So they're not always a bank, but they're providing financial services to the customer. So they have access to the customer, and they can bring those customers without us having to pay for the advertising costs. And what this does is it allows us to take the pricing of the product and keep it low and affordable. So when you have the distribution and the local partner, you have success. There's one last concept, and I am giving you some long answers, so I will apologize for that. We talk about this a lot. It's part of our DNA, how we were built, is we love the concept of embedded insurance. So embedded insurance is where you embed the insurance in the customer journey. So typically, a classic example is when you buy your airline ticket on LATAM or Delta Airlines, they ask you right at the point of sale, do you want to buy the insurance? You click a button and you get the insurance, super easy. So I love that idea if we can work with a partner where we can be embedded in the customer journey where it's natural. So if a customer is already working with a bank or a mobile phone company, and this is their primary way they do their banking, or this is the primary way they exchange money, then it's a very natural place to sell insurance. I do think insurance can be sold through some other channels. I think I look at how in Mexico, convenience stores have become almost like the local bank for so many people. You go to your local convenience store and that's where you do your banking. So I think microinsurance can be sold at the retail level, but again, it fits my concept of the customer is already inside the store, and it gives access to that customer, and it takes away those costs of trying to acquire the customer.
Supermarkets or maybe electric companies, maybe.
Yeah, I'll tell you a really cool example with supermarkets. Supermarkets want to create loyalty with their customers, of course. They want the customer to shop in the supermarket. So what is, I would love to build something like this in Latin America. You walk into a supermarket, and if you're in the loyalty program, you have the benefit of salary protection or income protection. So if you lose your job, or if you're sick or injured and you can't work, you get 200 USD of free groceries. I mean, that's really cool. It's amazing. Like, why not? We can do this. The grocery store can do this. I know how much money they pay to market to their customers. Why not offer their customers protection? And what a great thing if someone comes in there and say, "Oh, I lost my job, or I'm injured, I can't work anymore." And they say, "You know what? We're going to take care of you. You get free groceries for, 3 months or 2 months or whatnot." It's the same thing with this could be done with banks. It could be done with mobile phone companies. The mobile phone company could say, "We'll pay your mobile phone bill for 3 months if you lose your job." Super easy. And then the customer has access to income protection, and when they're working, they can afford to buy the policy themselves. So there's so many ways we can help in our society to just be that helping hand when someone falls to catch them. And we're this close, but I think we need to expand our way of thinking about how we market insurance.
How do you see the future of microinsurance with the increasing adoption of technology and in emerging markets?
I think there's a tremendous opportunity, and something that we've been working on and developing. We go back to our product. We call it My Income because it's my income, mine, but it's also MI for microinsurance. It's a little way we've market our product. Our My Income product provides income protection for people, and we have different triggers. So the first trigger, the natural one, is the health trigger. If someone is sick or injured, it works very much like a accidental death and dismemberment policy. If someone is sick or injured or critical illness, it pays them directly an amount of money in their pocket. The next trigger is what we call involuntary loss of employment or layoff protection. If you lose your job, we give you, 3,000, 4,000, 5,000 USD, whatever the amount of coverage you buy. The future, I think, is with, and we've just created this. We call it a micro resilience insurance product. So it's working for natural disasters. And we are using our technology-enabled insurance platform to create these micro resilience insurance products that put a small but relevant amount of money directly into the pocket of people of limited means so that they can provide food for their families, and if needed, pay for transportation or temporary housing after a natural disaster. So I look at the hurricanes that went through Mexico, the earthquake, and how so much of Chile and Peru lives in fear. Ecuador lives, we're all waiting for the next one. Wouldn't it be amazing, instead of having to wait months for the government to come in and provide support, maybe the World Bank will come in, and these are wonderful things to provide money to recover, to rebuild the roads and the schools. But what about the people who just need a little bit of money to put food on the table for their families? So I think the future of micro insurance is to take these concepts that have existed, but to innovate and to use it to solve today's problems. So I love this idea of putting a little bit of money into people's pocket. We talk about so many people in our society don't buy insurance, and I get it. We were talking with someone who lives right in the ocean. They get a hurricane every 3, 4, 5 years. They know it's going to happen. Their house is quite strong. It's built with reinforced concrete and steel. They have the shutters that come down. And I asked, do you buy insurance for hurricane? They said, no.
Oh.
I said, well, what do you do? They said, well, we close our shades and we pray, and the reality is their house is probably okay. And even if they rent the house, they don't buy hurricane insurance. But the problem is, after the storm comes through, let's say they're fine and their house is fine, or maybe it's not fine, but they open the door and they go outside and they're like, ooh, this was a bad one. And what that means is there's no power for 3 weeks. All the food's going to spoil in the refrigerator. They're going to have, the price of food is going to become much more expensive. It's going to cost 3x. There will be a lot of work in 60 or 90 days with the cleanup, but for the first 60 or 90 days, there's no work. So how does somebody feed their family? So I think it could solve a lot of the immediate risk. It can build resilience. I use that word because it's quite important in our society. It can build resilience in the community so that the the people, not just the governments later, but the people very fast. And this is where the technology comes in and the partnerships with the banks and the mobile phone companies. Imagine waking up the next day and you look at your digital wallet and you have, $1,000 or $2,000 sitting there to help you provide for your family. It's just a different, that future is not 10 years from now. We can do that today. We've already launched this product in India around excess rainfall. If there's too much rain and people can't go to work, we put money in their pocket for their lost wages. So these products are there, the data is there, the technology is there. We just need to put our three legs of the stool. We need the local partner or the insurance company, the distribution, and the technology. And we have the solution. So I think that's where I would like to see microinsurance go. And I think we're so close. This could be done. We could do this in the current year. This is not 10 years from now. This is not, we need AI. We could do this today.
What advice would you give to companies that want to join microinsurance sector and adopt technology solutions?
There's a tendency, I think, in most companies and most people, like they say, I'm smart, I can build this myself, I can do this. The reality is it takes a lot of time. And I think there's a healthy skepticism, like, why do you have competing things you need to invest in? Why invest in microinsurance and technology when you have to create new technology for your automobile insurance or something that already exists? So my advice would be you don't have to reinvent the wheel. It's already invented. It already exists. You can see what people are doing in other countries. And I use a word, I call it scale and replicate. So we can take an existing concept that we've already built in one country and we can replicate it in another country and then scale it rapidly. We don't have to recreate the wheel all the time. So whether you're speaking with a company like MIC Global or another company, and I said it in the middle of our discussion, I think the key is partnering with the right people. You partner with people who know how to do this product. We're doing it today. We were approached by the largest insurance company in Saudi Arabia and the largest insurance company in Qatar. I did not plan to focus on the Middle East, but they came to us and they said, we want to introduce microinsurance products into our market. And they said, we'd like to partner with you. And we realized they're much bigger than we are. They can take the risk. They're smart people, but together we help them build it. We can use our technology and very fast we can launch a microinsurance product with them in 90 or 120 days rather than them taking 18 months or 24 months to build out the infrastructure. So I think, for all the insurance companies out there that are interested in microinsurance, there's an absolute opportunity, and it's not just our company. There are a lot of specialists in this field that you can partner with to try and get a product, do what I would describe as a MVP, a minimum viable product, or a pilot, test it, see how it works in your local market, and then replicate. We do this very well in the insurance industry. We look what other people are doing, and we adapt it to the local markets. We don't have to reinvent the wheel each time we're building a car.